Hello, Rob Norman. Welcome to our Future of Media Trading event and your debut at a Mediatel event, am I fair to say?
I'm not actually sure that's true, but it was a long time ago. But I've obviously known Mediatel and you for a generation, and Dominic Mills also. So it feels like familiar territory.
That's very pleased. We're delighted to have you back on board because, of course, you've been long gone from the shores of Blighty for how many years now?
Boxing Day 2004, I took flight.
Right, okay. And do they still let you back in?
They do. Well, not at the moment, but hopefully sometime soon.
Are you responsible for this? Yeah, I think actually the US shut doors first, didn't they? So I'm not allowed to come and visit you anymore.
It's hard to tell, Greg. Who do you believe these days?
I don't believe anyone. Never have, never will. Yeah, you train me well. Um, so certainly for you and I, it's the first time I've spoken to you in a professional capacity since you've left the comfy environs of GroupM. You're now a pluralist, I think it's fair to say, with your fingers in more pies than ever. But I was wondering now you've left that safe, comfy home of a holding company. Are you free to tell us how bad that model really is and how that scale isn't important because of the tech behemoths?
Well, it's an absurd conflation of assumptions, I think. One, that it was comfy being in a holding company, because it wasn't. It was very difficult, combative, and competitive on many fronts. So it was never comfy. I think that people who work in those companies would have been fairly frank about how difficult that is and some of the constraints caused by their own business model, as well as some of the opportunities. And I certainly don't think that they're in the emergency room in terms of their survival. I think, like everything else, they have to change. And GroupM, even, which was the business I worked for the last and a significant part of my career, is a business that evolved enormously between the time I became part of it in 2002 and the time I stopped being full-time part of it at the end of 2017. But as for freedom, I'm free to speak about whatever you would like.
Yeah, so, well, answer the scale question then. So, GroupM traded as certainly in Europe as being number one was their absolute marketing strategy. But presumably, you're in the camp where scale is not important when everyone is dwarfed by Google and Facebook.
Well, I suppose scale of what is what matters most. And now there's a value in scale if you have more intelligent, interesting people to solve complex problems than the other guy does. And you can apply more of those people to clients of greater scale who need that kind of thing. I'm sure the inference of your question is the total volume of money that's traded by the enterprise the key discriminator between group one and group two, or even anybody else in the value chain? And the answer is it's not. But there's a further debate that says, was it ever the only thing that really counted? And we always knew that when we had a superior volume situation, it was only valuable if we put it to work properly. So, as Nick Steepstone used to tell me, the perfect television trading book in the UK was the one where the agency, on behalf of its clients, took the maximum amount of value off the table from all of the media sellers, yet all of the media planners and the clients themselves could be in whatever inventory they wanted to be. And that's a perfectly run book, because the key to media planning and buying always was that the traders had to buy the plan, but you really had to plan the buy to make sure you extracted the most value from the marketplace.
You use the word intelligence there,
Yeah.
which again, and then you use Nick Thixton. So let's put those two things together for a second. But actually, I've always liked, again, I can't remember where I first saw it, your three eyes transition from information through intelligence into imagination.
Yeah.
Yeah. Do you think that there's room for imagination in the Thigstons of this world, the traders of the 21st century? Have you got any examples of those imagination traders, or will traders become imaginary?
Well, I was chairman of Media CIA in 2002-3 after the merger, luckily saved by the hiring of Tom George. But the key to that experience, apart from Tom, was the fact that Kelly Clark, Nick Theakstons, and Frillo and a Bignell or two helped enormously create the first GroupM trading. And that took a great amount of courage and imagination. So I would apply those things to Nick Theakston as it happens. I think that when I think about at that time, we sort of were information workers, like generations before us were factory workers, and generations before them were workers in the field. But it became clear the moment Excel was invented and other things like Excel were invented, that just trading in information was insufficient. And the discriminator between people was either processing that information faster than other people, and that's one side of the market we're talking about now, but also applying intelligence to that, and on top of that, imagination. And my sense is these days that you let machines do what they're good at and let humans do what they're good at. And Gary Kasparov said in an interview a couple of years ago that always sticks with me, there were huge periods of time in which machines could not compete with men, short periods of time in which they competed on roughly equal terms, and eternities in which men could no longer compete with machines. And so you have to pick your ground carefully as to where you apply your people and how you think about what you're training them to do in relation to what the role of machines and the role of people is. But I do think there's plenty of room, and there's room because algorithms don't write themselves. And not only do they not write themselves, they tend to be needed to be written for a variety of circumstances. So the algorithms that optimize Facebook and the algorithms that optimize Google are there for the benefit of Google and for Facebook. What people who work on behalf of clients and across a broad scheme of media need to do is think about creating those algorithms that look across platforms and look from the top to the bottom of the purchase funnel. And for me, that's an exercise in intelligence and imagination, because you have to remember who it's being done for.
Okay, and to your point, you're 15 years in the States. I would argue that the imagination has all been shown by the West Coast and the Valley kids, and not the East Coast and Madison Avenue. Would that be fair?
Well, it's a completely different economic model, Greg. Obviously, it's very difficult to create a network effect in the same way that was created by Google and Facebook and others. It's very difficult in a business-to-business environment like marketing services to do something in a business-to-consumer environment that provides enormous utility at almost zero marginal cost, which is what Google and Facebook did, and therefore created terrific value. So consequently, their ability to invest in the engines of optimization on top of those networks is greater than Madison Avenue's. But you do have to think about how to be nimble and how to help clients understand where the Facebook ecosystem fits into an overall media marketing plan, and how the allocations should work between different platforms and different objectives are not jobs that are being done by the West Coast. And you'll remember, I think it was Eric Schmidt, when he was chairman of Google, said a number of years ago that there will be a time when advertisers just give Google their budget and Google will allocate it and optimize it, both within and without the Google ecosystem. And Eric Schmidt is no longer the chairman of Google and hasn't been for a long time, although it seems to be he's going to be the reinventor of New York State, according to the governor. And yet still, Google do not take the whole advertiser's budget and allocate it and optimize it within and without the walls of Google. So some things that people say don't come true.
That's true. Back to the East Coast, I mean, one of the great Madison Avenue inventions was the Upfronts. Yeah, that sort of parade of media where they allocated huge billions of dollars of money, and it's been a fad that caught on rather later over this side of the Atlantic. I mean, is that sustainable now in a world of real-time trading? Will the nirvana of the auction take over everything?
So it's good that you got the auction word in there, Greg, because the upfront is actually just a futures market. And there are many futures markets that operate around the world. And futures markets are when people need to secure a given kind of inventory at a given moment in time. That's why you buy a future in something and you make a bet on the price of buying it as a future and the value of guaranteeing its availability versus the risk and potential price fluctuation of buying something in spot markets. And any commodity in the world, from oil to greetings cards, trades in, broadly speaking, the same way in that sense. And so what we're talking about is two things here. One, is the event of the upfronts and the ritual of the upfront still necessary? And I would suggest that it probably isn't, because production cycles and the need to guarantee presence in given television programming particularly is not the same as it was, because the only mega rating programming left was live sports and presumably will be again at some point in time. So I think the upfront is less important from that point of view, but the need to secure a guarantee of future inventory if you know you're launching a vehicle or a drug or a something or other, I think doesn't necessarily go away. So I don't think the market will become all spot and no futures, but I do think that most of that futures market will be subject to auction-based pricing, as most other futures markets are.
Okay, and that, I mean, quite often auctions are seen as taking value out of the marketplace, so that that value differential is based upon a point in time rather than a differentiator versus your competitor, whether that be an agency or a competitor within a client sector. What's the future of media value? How will people demonstrate media value?
Well, I don't think auctions, by definition, take value out of markets. I think the Saudis, who spent $450 million on a questionable Leonardo, would not be someone who took value out of that particular market. In fact, the auction injected it, because you could never have sold it privately for that amount of money. And I think people think that auctions are inherently playing level field playing things. And I'm not sure that's always true, because auctions tend to have a lot of competition built into them, and as long as there's someone prepared to pay $1 more, then the auction keeps rising. So what it does, it actually corrects for the amount of demand that's available in the market. And you would know that the more participants there are in any given auction, the more likely it is that the value of the end of that lot reaches a high point. So I don't think it's true to say that auctions extract value from the market. The other assumption people make about auctions is that all auctions are available to all people, and they're not. So whilst it's possible that all of us could have bid against the Saudis for the Leonardo, we didn't, ironically, but there are going to be many auctions in the world of media that will not be available to people. And it will be interesting, for example, for Sunday Night Football on NBC, or for the Premier League, or, what I'd really like to do is buy the centre break of the Queen's speech, if that ever comes up for sale. That it may be true that they may limit the participants in the auctions to brands or enterprises they think are appropriate to be in that, whatever appropriate means. So I think auctions are widely misunderstood, both in terms of what they do to value in the market, and secondly, who is involved and what participation means.
Right, thanks. Yeah. So talk about that. You've got into brand there, and just as I was going to go in direct response, and of course that's sort of where we were previously, where actually only if you had good credit work you were allowed into certain programming, which seems to have disappeared with the Google auction, where they're unable to control quality certainly on their video product. But let's go back to the annals of direct response, where one of my favorite things at the moment, Lester Wonderman, who invented direct response, actually his industry had a rebranding into performance marketing. Do you know who the genius was? Was it you, Rob? Or did you reinvent direct marketing as performance marketing?
No.
Actually, is that a problem? I think Jerry Boyle said to me, he said, so do other pieces of media not perform? And of course, that's probably the case. But what do you think about performance marketing as a moniker?
Well, it wasn't me, because I can tell you that. Someone told me that I was the first person to use the words paid, owned, and earned in a presentation, which worries me. And if it's true, I apologize,
Yeah,
because
right.
if it turns out that in earned media you get what you pay for. So I didn't say that. I think actually direct marketing got reinvented and rebranded as CRM rather than as performance marketing. And I think performance marketing is tricky, not because it's wrong to pursue outcomes, but it's wrong if it encourages the wrong incentives. And so there's a couple of ways of getting to the finish line of the London Marathon before everybody else. One is to start from the same place and run faster, and the other is to hop out of a bush half a mile before the finish, having not run the first 25.8 miles, and then just run the last bit and hold your hands up in the air. And I sometimes think the pursuit of last click attribution, some of the models around affiliate marketing, do feel a bit like the bloke that jumped out from behind the bush. And my sense is that if you're a great marketer, what you do is you look at your objectives, you look at the performance of the media on a fair and balanced attribution basis, and you back it back out to the currency that most enables you to get to that outcome for the least amount of money. And the cleverest performance marketers buy things on a cost per thousand basis, not on a cost per click or a cost per action basis, because the idea that you win by mitigating risk, I think, is completely artificial.
Again, I like the bush analogy. Let's carry on with that one. You've just jumped from behind a bush at Trent Polytechnic, and you've found yourself in a job at WPP and Google. Yeah, which one do you take?
Well, have I been offered both, or am I going for an interview?
You've been offered both.
Oh,
your Schutzper has got you 2 job offers. Which one are you
yes.
going to take?
Well, I know the marketing people at Google, and I'd be terribly worried about getting found out very quickly. There's some very, very good people in marketing at Google. My general sense, if I was applying, I wouldn't have applied to Google in the first place, because my guess is less than 5% of the people that work for Google are in marketing, and it's a business dominated by engineers. And I've always thought that I'd be happier working in a business whose business it was to do the thing it was that I was good at. I always said the worst job in the world is to be the CMO of a law firm. Why would you do that? So my sense is that at WPP, apart from the beloved finance team there, almost everyone in the enterprise is involved in marketing or somewhere or another. So I would have rated my chances of both getting in and rising through the ranks simply because of the more availability of more senior jobs in the discipline that I worked in at WPP. So antithetically, I suppose some people might say these days, I would have gone to WPP and still would.
I'm delighted to hear that. Yeah, but I'm going to throw something else at you. As you walk out of WPP Towers, there's a recruiter from TikTok who likes your winter sports sweatshirt and says, "Why don't you come and work for TikTok? Do you change your mind, or do you still go to WPP?"
Well, I've always thought that the best thing about working in advertising was to be thinking about banking one day, skincare another day, airlines the day after, phone networks the day after, television the day after that. And I love the idea that it gave you insight, however superficial some people might say, into the operations of large parts of the economy and large parts of the way that people live their lives. And I think there's a certain richness in working in the advertising or marketing services business that is hard to replace working for a single polemic view of one media platform or another. And I think the people that will work at TikTok, as many of the people that worked at Facebook, will do terrifically well, and God bless them for that. It just doesn't appeal to me. What I'd really like to do is to have a career again working in advertising, to be rewarded as I was, which I thought was more than fair, but to do it in a way that there's less people sniping from the outside and more people in all parts of the value chain realizing that the reason why we're all here is to drive growth for brands and corporations, and in so doing, create employment for lots of people. And to be in the demand generation business, which is what you are in if you work in advertising, is a fine place to be.
Well, thanks very much. That is a very uplifting and positive note to end on for someone that has spent a lot of time, dealing with those, big tech giants and thinking about, the opportunities that they offer to, the wider world. To actually say 30 years later, I agree with you. Working on a variety of things is always better, and working in an industry that, where the craftsman at the top, is someone that you respect is a good thing. So thank you, Rob. That's been very interesting, and I'm sure everyone listening to this, wherever they might be, will find that interesting as well. Thanks for sharing the thoughts with us.
A pleasure. Thanks, Greg.